Hello everyone and welcome back to my YouTube channel. So today I'm going to tell you what is the stock market and how does it work. I'm sure you've ever asked yourself how and where the wealthy people invest their money, or maybe you've heard about the stock market on the news and felt confused. Well, you are not alone. Today we are breaking down one of the most powerful financial systems in the world, the stock market. By the end of this video, you will understand what stocks are, how the market works, and what millions of people invest every single day. Come with me. Well, what is the stock market? Friends, first we need to understand the basics, okay? The stock market is a platform where shares of publicly traded companies are bought and sold. Think of it as a giant marketplace, but instead of buying vegetables or clothes, you are buying pieces of companies. When a company goes public, it divides itself into thousands of tiny pieces called shares or stocks. Each share represents a small ownership stake in that company. If a company has 1,000 shares and you own 10 shares, you own 1% of that company. The main purpose of the stock market is to help companies raise money. Instead of borrowing from a bank, they can sell shares to the public and collect cash. In return, investors like you get the opportunity to own part of successful business. The stock market also serves as a marketplace where investors can buy and sell their shares with each other. This trading creates price movement based on supply and demand. Friends, now let's talk about how actually stocks work. Let me give you an example to make things easier for you. Okay? A tech company called TechCorp. The founders decide it's time to go public and raise capital. They decided to issue 1 million shares at $50 per share. On the first day of trading, you buy 100 shares of TechCorp for $5,000. First, I want to congratulate you because now you own 0.01% of that company. Here's where things actually get more interesting. The value of your shares doesn't stay at $50 forever. Stocks price change every single day based on what people are willing to pay for them. Well, let's say 6 months later, TechCorp releases an amazing new product and everyone loves it. The company makes a lot of money from it. More investors want to buy TechCorp stock, which increase demand. With more demand and limited shares available, the price can go up to $75 per share. Your 100 shares are now worth $7,500. You've made $2,500 profit just by holding the stock. But let me tell you that it works both way. The stocks can go up and down. If the stock price drops to $25 per share, your 100 shares are now worth only $2,500. So unfortunately, you've lost $2,500. This is why stock prices fluctuate. They are driven by company performance, market conditions, and countless other factors. Here's another important concept: dividends. Some companies share their profit with shareholders in the form of semestral or annual payment called dividends. If TechCorp makes 100 million profit and decides to share 20% of it, you might receive a dividend payment based on how many shares you own. Additionally, when you own stock in a company, you often get voting rights. You can vote on important companies' decisions at annual shareholders' meetings. The more shares you own, the more voting power you have. Well, now let me explain you how the stock market operates. Okay, let's break down the mechanics of the stock market. Stock exchange are the actual platforms where all this trading happens. The most famous ones include the New York Stock Exchange. This is a physical and digital marketplace where buyers and sellers meet. When you want to buy a stock, you don't go directly to the company. Instead, you use a brokerage company. A broker is essential a middleman. You open an account with a brokerage, deposit the money, and then place an order to buy or sell stocks. Well, let me also give you an example how a typical transaction works. You tell your broker you want to buy 100 shares, for example, of TechCorp, at $75 per share, your broker sends this order to the exchange. The exchange matches your buy order with a seller sell order at compatible price. The transaction happens actually quickly and the shares are now in your account. The price you see on your screen, whether it is $75 or $76, is the last price at which someone bought or sold the stock. This is called the current price or market price. The stock market operates during specific hours. For example, in the United States, the market is typically open from 9:30 a.m. to 4 p.m. on weekdays. However, there is also after hours trading from 4 p.m. to 8 p.m. While it's crucial to understand that the stock market is not a single entity, it's a complex system of exchange, brokers, regulators, and millions of investors all working together. Regulatory bodies like the Securities and Exchange Commissions oversee the markets to ensure fair trading and prevent fraud. Friends, quickly, let's just recap what is the stock market. Okay, the stock market is a platform where you can own pieces of company and potentially build wealth over time. Stock prices fluctuate based on company performance and market demand. When a company does well, the stock price typically goes up. When it struggles, the price falls. You can make money in two ways: through capital gains when your stock price is up, or through dividends if the company shares its profits with you. Friends, I hope you understood what is the stock market and how it works. Thanks so much for watching. Don't forget to like and subscribe, and see you soon.